Welcome everyone. Please come as close as possible. We have a big room today for this nice session that we're gonna go over. So don't be shy. I think it's good to have everyone here in front as much as possible. We'll also have questions for you, so it'll be nice to interact. So very warm welcome from my side to the audience. My name is Jung. And I'm honored to be your moderator today for an insightful breakout session on navigating the evolving regulatory landscapes across the globe. I'm heading the ESG business at STOXX, and I have previously led the ESG product management team for about 5 years, where I was actively involved in building out actually our regulatory solutions, which help investors to address the rising number of regulatory requirements that we're gonna discuss today in our panel. So the last few years we have seen an exceptional growth in sustainable finance regulations. The PRI regulation database, for instance, has collected policies from the top 20 countries by PRI signatory count, plus the G20 members and the European Union. And the database tells us that since 2014, across the jurisdictions assessed, the variety of policies has increased by a third, from 15 to 20. Examples of the introduction are of taxonomies, obviously, and investor due diligence requirements. And in the same period, the number of policies that reference the Paris Agreement has increased from 33 to surpass 200 of the 379 entries in the PRI database. Disclosures with a focus on managing sustainability-related risks have been the primary focus of these regulations. However, we also see a growing body of policies that require companies and financial institutions to address the drivers of sustainability-related risks or to support an economy-wide transition. These include, again, sustainable taxonomies, transition plan requirements, stewardship, and also due diligence regulations. This panel today will take stock of existing approaches to disclosures and look at the variety of policy instruments that are being put in place and how alignment across geographies can be improved. We'll also explore how financial regulators are building on such disclosure requirements to enable financial institutions to take actions towards achieving sustainability goals. So I'm delighted to be joined today by a distinguished panel that will be able to provide a variety of perspectives from all over the globe. We have, like right next to me, Sacha Sadan, who is Director of ESG at the UK Financial Conduct Authority, FCA, and will share the approach the UK has taken towards sustainability disclosures and regulation. We have Nicole Yazbek-Martin, who is the head of Taxonomy and Natural Capital of the Australian Sustainable Finance Institute, ASFI, and will provide us with a perspective from down under. Then we have Stephane Tardif, who is managing director of the Climate Risk Division of the Office of the Superintendent of Financial Institutions, OSFI. A lot of abbreviations. I'm trying to explain them to everyone. In Canada, and will provide us with a more local perspective on the Canadian market and the regulatory environment here. And last but not least, Verity, Chegar, who is a board member at the International Sustainability Standards Board, ISSB. Now I went through all the abbreviations. And we will hear from her on how ISSB's global baseline for sustainability reporting can contribute to more global alignment and foster interoperability of standards across the world. Now, throughout the session, we'll also use Slido polls, so you'll be invited. Please make sure you are connected to provide your inputs and to also shape the discussion with the panelists. Please also share any questions that you have and would like to be addressed by the panel via Slido throughout the session, and raise your hand. We can also have, I think, a microphone that is going to be roving to grab, and then you can ask your questions directly. But now, without further ado, I would like to turn to our esteemed panelists, and I'd like to start with Nicole. Can you maybe tell us, ASFI has been actively involved in the development, obviously, of the Australian taxonomy, and this taxonomy is, I think, special in a few ways, in that it has been industry-led at the beginning and now has been adopted by the government. However, it's still planned to be voluntary at this point. And can you share a bit of background on the Australian taxonomy and where you currently are in developing it?
Sure, thank you, and great to be here. So yes, the Australian Sustainable Finance Taxonomy development has taken a bit of a different path to other jurisdictions, and it is also, I think, very much tied into the origin story of the Australian Sustainable Finance Institute. So I might start there, because it was really, the Institute was formed, it was initially an initiative that was an unprecedented collaboration across the full financial services sector, from banking, our asset owners and asset managers, insurers, and the services in between, to really think and look about what sustainable finance and the sustainable finance roadmap meant for Australia. And it was very much driven by that need and desire to recognize that this is where markets were going in Australia, and that we weren't going to wait around for things to happen, that the finance sector really wanted to get on and do the job. And so that roadmap that put out sort of 37 recommendations, which I think we all know well, which is the sustainable finance architecture. It's really looking at how you identify and price risk, so recommendations around that, how you set targets, and then how you start to seek those opportunities. And of course, this is where the taxonomy comes in, because it is in essence that shopping list for the future. And so it was one of those 37 recommendations, and I think why it rose to the top, and when ASFI was formed as a permanent institute to drive those recommendations, the taxonomy really came out as something that the industry itself saw as a priority, because there was a very strong desire for financial institutions in Australia to start to participate in the opportunity side of the equation. A lot of transactions were happening sporadically across the sector, so from the banking side, but also universal asset owners who are very exposed to global capital markets really wanted to start to understand what this means for them. And I think there was also a recognition that within Australia, we do have a different coverage set. Our asset classes within our country are not really matched up with what was out there at the moment with international frameworks, including with the EU taxonomy. And so there was a lot of value seeing in looking at something that obviously was very much aligned to the frameworks internationally, but that really catered for the unique circumstances of Australia. And so we took a industry-led approach, very broad tent, drew on everybody to sort of get their input about how we could develop a taxonomy that's fit for purpose. We really had the benefit of drawing on international peers, so we worked a lot with the EU in the early days to understand what they had done. We worked a lot with Canada and their initiative through the SFAC, and ASEAN and Singapore, and then came up with a framework. And I think it is at that time that the Australian government had a policy change. They really saw sustainable finance as instrumental as a policy lever to channel private capital to their decarbonisation agenda. And they also saw value in continuing to partner with industry on that. And so we've now, working collaboratively with the Australian government, we still have an independent industry board that is developing the technical criteria, but we have oversight from our Australian regulators and government, that signal of authorizing support that this is going to be a benchmark that can be used by the market going forward. And so we're covering 6 key sectors across the Australian economy. These are the same 6 sectors that the Australian government is currently developing decarbonisation sector plans for, and at the previous panel they mentioned there's also been pathways that have been developed. So you have this stack of information that is now very useful for investors that align back to that activity level taxonomy that can be taken forward, and that will be delivered to the Australian government at the end of the year.
Brilliant. Yeah, I think that's really a very very interesting approach that Australia has taken. We just have some technical issues, but while we're fixing that, I'd like to move over to Stephane from OSFI and ask you a bit of a similar question, because I know that OSFI has a very specific mandate and role within the Canadian regulatory environment, which is its own ecosystem, and it would, I think, be helpful for the audience as well to, if you could explain a little bit and describe the remit of OSFI and provide an overview on what you and your team are currently doing in that space.
Thank you, Till. and I was frozen in fear that it was my microphone, so I'm glad. um, so thanks to the PRI for inviting OSFI to participate, and I'm really glad to be here today. So just to provide a bit of context, particularly for our international guests, the Office of the Superintendent of Financial Institutions navigates in a, I would say, relatively complex, heterogeneous financial supervisory regime in Canada. So we are not the only regulator. There are many other financial regulators who are supervising, for example, provincially led companies, large asset managers, pension funds. We have a central bank that's separate and distinct from the supervisory regime where I am. We have provincial regulators, so it can be quite complex, maybe even overly so at some point. And when it came to the sustainability or climate file for, in this particular instance, it was important that we find how we could carve out a niche and contribute to this very important topic. And the way we approached it was to sort of really focus on our strength, which is risk management. OSFI's role is really, as a prudential supervisor, is to instill confidence in Canadians in the financial system and to ensure that institutions are managing risks and resilient to, in this case, what we're talking about today, climate. So we do not have climate in our mandate. We do not have climate in our legislation. We did not have a climate team up until a few years ago. And the organization made a very strategic, tactical decision to establish a dedicated climate specialty team, which I'm leading. We're just coming up on 3 years, and for the past number of years, it's all been about building capacity, staffing the appropriate resources and technical skill sets, acquiring new sets of data, new technologies, new models, and developing prudential guidance. So last year we published, similar to many other jurisdictions, a prudential guideline for managing climate-related risks. We went so far as to also include expectations for climate-related financial disclosures, which we've aligned with the IFRS S2 standard. I think we're still the first financial regulator in North America to have adopted S2. We have developed a standardized climate scenario analysis methodology, which all of our institutions are currently in the process of performing that exercise. The results are due later this year. And we've also developed statutory regulatory data returns. So these are statutory statistical returns that institutions will have to provide to us on a mandatory basis, confidential basis, with very sensitive exposure data, emissions data, to help us build up the analytical capability to understand where there are vulnerabilities in our financial system. So the last few years, Till, have really been about building capacity, and now we're moving into execution. Our guidance becomes effective at the end of this fiscal year in a few months. And next year, the team will be pivoting to actually supervising financial institutions. So actually getting in frontline supervisors, getting into the institutions, assessing their strategic plans around climate, their climate transition plans, their data strategies, how are they embedding climate into their pricing, risk models, and ultimately, how are we seeing that manifest its way through the regulatory requirements such as capital, and ICAP and ORSA and all these other types of processes that are already built in, and we're looking forward to the next phase of our journey.
Perfect. So really risk-focused, exposure-focused work that your team has been doing, and particularly on the climate topic. So over to you, Sacha. You have been obviously at the FCA actively involved in the work of the Transition Plan Task Force, the TPT. And can you briefly give us some background on the approach the UK has taken with the TPT? So focus on transition rather.
Hi everyone. It's nice to be back, and as I said, it's my 10th PRI as an asset owner and asset manager, and now as a regulator. So I tried to play quite a few roles, and it does help me when I'm looking at what's going on in the ecosystem to try and think about that. Now, you know the UK well enough. The financial markets are huge, but they're completely interlinked globally. And the companies that we regulate and supervise, most of them are very, very big global players, and therefore we try not to just have UK-centric rules. So with that, we were looking at when climate and COP26 happened in Glasgow, and that was the time, if you all remember those times, when everybody started signing up to net zero commitments. And it was literally hundreds and hundreds of companies were not wanting to be left out. And signing up to something is very easy. Doing something's a lot harder. So we decided in the UK that we would try and help companies and also make sure that we got them to do things and not just say things like, I've signed up to a net zero 2050 commitment. So we set up, the UK government and ourselves set up the Transition Plan Task Force, and within 2 years, it's done all of its work, including sector-based work. It's worked with the CFOs and CEOs of real companies. It's had World Wildlife Fund. It purposely didn't want to be UK. So we had Mary Shapiro, ex-chair of SEC, to make sure we had ISSB working with us, to make sure it was international. The work was done so well, that the companies thought so, that it's now not even the UK Transition Plan Task Force, it's now been merged into ISSB. So we're pleased, for free, it was given to ISSB to try and help solve these problems. Now, why is it important? Because I've just said, it's very easy to make commitments. It's not easy to do transition plans. So even if companies really want to, it's quite difficult. I think we probably should change the word, and if I could do it again, I'd probably change it to opportunities, because everyone talks about risk, but there is going to be fabulous opportunities, and there's asset owners out here to be able to make quite a lot of money and to change their portfolios, but they need to know which companies are adapting to the world that we're going to be living in. And I think transition plans are a perfect use case. The good news is we're starting to see commercial firms starting to rate companies based on their transition plans. And I would hope that in a few years' time, when we start mandating plans across the world and adoption of ISSB and other things happen, as is happening in Canada, we can start seeing the difference between companies who are doing a really good job of trying to adapt and companies who are not. And therefore the cost of capital will change, and innovative products will come out that people will want, that is forward-looking and not just backward-looking. So that's what we're doing, and I'm very pleased to see that it's going at quite fast speed.
Brilliant, Sacha. Yeah, I can assure you that this is also on top of our
Sure it is.
Agenda as a research and data provider. So transition targets, I think also the credibility of targets is certainly something that is extremely important to our clients, and something that we're actively working on to provide good and solid analysis. Verity, over to you. You've heard, I think, 3 very nice different examples on how different jurisdictions focus, I think, in terms of implementing their regulatory requirements and regulatory guidance. Can you tell us a little bit about the ISSB? Obviously, you're providing a global baseline for sustainability reporting. And can you give us a state of play of that development, and also what the uptake is in regulation, how you make sure basically interoperability or global alignment is actually taking place within the different approaches?
Thank you, Teal, and thanks to the Mississauga First Nation for inviting me here to this land. I traveled here from the land of the Coast Miwok people, which is now called Marin County, or San Francisco, where the Golden Gate Bridge is. And the Golden Gate Bridge is, as you know, painted international orange, which is what I'm trying to wear here. But I see Nicole is very internationally minded too, so I'm very pleased we're all syncing up here. And it's wonderful to bring sort of an international contribution to really align with these views from Canada and Australia and the UK and others in the room. So we are seeing great embrace and very strong commitment for the ISSB Global Baseline. Today we are counting about 25 jurisdictions, quickly on the way to 30, which have made public announcements and plans that look different, but solid plans and commitments to align with the ISSB global baseline and adopt the ISSB standards. Sometimes this is led by the regulator, sometimes it's with the prudential regulator involved, sometimes it's led by the stock exchange. But we're seeing support for the ISSB global baseline in 25 jurisdictions across developed markets, emerging markets, and developing economies. So the global north, the global south is there for consistency, really based on this vision of globally consistent, comparable information that is decision useful for capital markets. Because our standards ask companies to disclose the sustainability-related risks and opportunities that are related to an entity's cash flows, its access to capital, its cost of capital, and then the information about those risks and opportunities. We are asking companies to describe what they're doing. We are not telling companies what to do. And this is an important distinction, and it's a way that ISSB and ISSB standards remain policy neutral, which really means that we're applicable and complementary and can fit into a policy toolkit for every jurisdiction. And this was part of the thinking when the International Organization of Securities Commissions, or IOSCO, which includes Canada, Australia, UK, and 130 or so other jurisdictions, including the US and Europe, they independently assessed our standards after we published them last year. And they evaluated and determined that the ISSB standards are fit for purpose in every capital market. And this is a really huge statement. IOSCO doesn't go around endorsing things left and right. The last time they endorsed anything was 20 years ago when they endorsed IFRS accounting standards that's suitable for every market. So this was a really impactful decision, and it was extremely useful for those capital markets in particular that may not have the breadth of team or the time of the people involved to go through an independent and additional consultation process. So we have noticed that this impact from IOSCO and their collaboration, especially with global emerging markets and developing economies, has been extremely important to make sure that the global south is present there and helping investors see their risks, their opportunities, and importantly, what they're doing about it. So we're going to talk a little bit more about how we fit together, but I think it might be helpful for the audience just to know about our S1 standard having really important nuts and bolts information about how to put quality information out in the market, that it's the entity that's producing the financial statements that would be the same entity that provides the sustainability-related financial information, that it's material information, and our climate standard S2 has some more specifics. So using the TCFD framework that is the backbone of both of our standards, when you get to that strategy section of the TCFD, you start to ask for, how are you preparing? How are you responding to the transition? How much money is that going to cost your business? What do investors need to know about whether you have that money today or whether you need additional capital and financing to achieve that transition? These are really important pieces of information for investors to understand should they continue to finance this entity's transition. Is it attractive? Are they a solution provider in the economy where they have an opportunity strategy that they can describe because of a new set of services or products or some other strategy that makes them a winner, if you like, in the long road to a low carbon economy? And then importantly, these financial effects, metrics and targets. And we can talk a little bit more about the work we're doing to support transition plan disclosures and make sure that investors and capital markets are getting this comparable information.
Perfect. Yeah, that's certainly very encouraging to hear the uptake. And I think, Sacha, you wanted to comment quickly on this.
I co-chaired IOSCO's sustainability work, and we really spent a lot of time to make sure we did the endorsement process, one, quickly, but professionally. So we were doing it in parallel. But I do think it's really important the audience know that that work is for the entire securities regulators, using all of the people that you'd want to do that. But it was important that we have an international standard. And the next stage, I was in Singapore 2 weeks ago for the last meeting, and it was all about assurance. That's just as important. And for anyone in this room, you know as well as I do, someone can give you a number, but I want a number that people have had verified and assured. And I think that work is going very well with ISSA 5000, which has already happened out there. So there is a lot of good work going out there to try and make sure that you can have numbers that then you can do things with those numbers.
So I would like at this point to also give you the chance to provide your views in the audience and pull up the first poll question that we have. So we wanted to know from you, after hearing the different perspectives here and also the work that the ISSB is doing, what should be the predominant consideration of policymakers in developing sustainable finance policy instruments? Should it be global alignment between jurisdictions, or should it be rather tailoring to local circumstances? And obviously, it's not a pure yes/no question. I think you might want a little bit of both, but we would want to hear what, in your view, is more important than the other. And while we're waiting for the poll results to come in, I'd really like to hear from you, Nicole. How has Australia learned from other jurisdictions? You mentioned already a little bit that obviously you have looked at what Europe has been doing and so on. But how did you basically tailor your approach to the local circumstances while making sure that you maintain interoperability?
Yeah. So, I mean, I guess with reference to the question, I really like the word decision useful information, and I think that should be the guiding North Star, which then really informs both the global alignment piece and the tailoring to local circumstances. And that's what we've really tried to do within the taxonomy context. We're recognizing that alignment is pretty crucial, so we need to take a similar approach. We need to structure it in a similar way. We absolutely need to have that credibility base of having science-aligned scenarios and pathways informing the technical criteria. But then in order for a taxonomy, which is really just a classification system of economic activities in a particular economy, that's where you need to get granular and localized in order for it to be decision useful when you're assessing assets and activities within that jurisdiction. So you can take the same methodological approach, but your baseline might be slightly different. The coverage of your activities that you're covering will be tailored to the economic circumstances and profile of that jurisdiction. And also the information and the proxies that you use will, in some instances, be localized, in some instances not. So in the built environment, every home is built to geographic standards, it's built to the circumstances of that particular country. Some jurisdictions, like in the EU, have got very different energy systems which flow through to, for example, their building sector. Australia has got a huge opportunity to decarbonise their entire building sector, so we can push a little bit further, but we can still be aligned in terms of our approach, which is a net zero aligned within those economic circumstances. And so when we really looked at internationally and to try and draw on those lessons, that was at the forefront of our mind. How do we make this information useful for the market when they're using it within the broader context, noting that a taxonomy is almost like a source code. It's not a policy in and of itself, it's just a tool, so it needs to be a useful tool. And that really guided our approach to how we did that.
Okay. Stephane, maybe you can also comment from a Canadian perspective on that topic. How do you see the balance between, catering to local circumstances, obviously, and making sure we have global alignment?
Yeah. So when if I go back 3 or 4 years ago and I reflect on where Canada was as a jurisdiction vis-a-vis our peers in the G7 and maybe even G20, we had, and I'm speaking here from the lens of supervision and prudential regulation. We had no guidance on sustainable finance or sustainable policies or in our case risk. And one of the advantages of ramping up after other jurisdictions have made so much progress is that you can learn a lot about what worked well and what maybe didn't work as well, and you can almost leapfrog. And I think the acceleration here in Canada over the last 24 months has been on the shoulders of all the hard work that's been done in other jurisdictions. and we've been able to really accelerate our work. And if you think about disclosures, there were no expectations for in Canada for financial institutions to meet disclosure requirements. Our first iteration had TCFD, and then a few months later, the ISSB or the IFRS came out. We immediately republished our guideline and pointed to IFRS S2 in a very iterative, rapid fashion to make sure that our domestic institutions were aligning with the standards that were being expected internationally. We tailored them a little bit for prudential purposes, but essentially word for word adopted S2. And we did that even before the Canadian Sustainability Standards Board was stood up, which is the board that will adopt IFRS ultimately, and are currently in the process of consulting. And we expect to see the final standards soon. So I think it's really important that domestically we reflect best practices and align as best as we can, but you have to adapt it to the local specificities. Another really quick example I'll tell you is as members of the NGFS, we've adopted the scenarios that are developed by the NGFS for climate scenario analysis. But we have a lot of vulnerability to, for example, flood risk and wildfires in Canada. So we downscaled the NGFS scenarios and tailored them specifically for wildfires and flood risk in the years to come, to really focus the attention on vulnerabilities and risks specific to Canada.
Yeah, I think just 1 second, Verity. What I wanted to just acknowledge is the result also that we had from the audience. So 70% are saying that global alignment between jurisdictions is more important, but 30% still acknowledge that there is an importance to also reflect those maybe also local and cultural specificities. And I think that shows how important alignment is, but at the same time that, I think sustainability is also a topic that is perceived differently in different jurisdictions, in different regions. So we cannot just have one solution for everyone, but probably more of a baseline that everyone can report to, and then an extension to it when it comes to regional specificities. But please, Verity, what is your?
I just wanted to echo Stephane's point about here, sort of the jurisdictions that are starting today really have an opportunity to leapfrog others who have been, going through various iterations for good reasons, but there is a coalescing and an alignment happening, an international harmonization, which is really available to kind of plug and play for a lot of jurisdictions. And Sacha's mention about the Global Emerging Market Committee of IOSCO is really one of those enablers that helps this to be possible, where, as we heard from the Securities Commission of Malaysia yesterday, this is one part of the puzzle of the whole government approach that Malaysia is taking to include ISSB disclosures in their requirement for large companies. In Canada, this concept of starting with the ISSB baseline, but also tailoring is showing up beautifully in the Canadian Sustainability Standards Board's proposal, the CSSB proposal, which includes S1 and S2 as the baseline, but then adds in a really important piece for Indigenous-related activities that companies are managing, which is extremely important, especially for the Canadian market, but may not be important for other jurisdictions which might also adopt the ISSB global baseline. But we're seeing Brazil show up with full adoption. We're seeing Switzerland right now has a proposal, consultation open for its proposal to say Switzerland, companies in Switzerland, which is in Europe but not an EU nation, member nation, could say we could take companies' disclosures aligned with the European Sustainability Reporting Standard, or we could take disclosures aligned with the ISSB Global Baseline, S1 and S2, plus GRI. So companies that are already using sustainability reporting indicators from the Global Reporting Initiative can use ISSB plus GRI to meet the same objective of comparable information that the whole global capital market system needs. It's what we call this building blocks approach to build on to the baseline. So I'm really interested to see this 70+% support for alignment, plus the tailoring, and you can have both.
Please.
Someone who spent 2 years trying to get IOSCO to endorse the standards for global alignment, thank God 70% said that. Now, some of the discussions that we had to have with this individual regulators were very fair about my companies are slightly different, I'm in a different stage of this, or what about this and that. The question wasn't that you should all go at the same pace, as you've quite said, but just don't go in a different way that then you couldn't have useful global information to then make decisions or comparisons. So you might go a bit slower, you might start with large companies first, you might start with large public companies, I think you need private at some point, but that was the discussions that we had all the time, and I think that was very important. And PRI was very helpful in pushing for this, and all I would say is the work hasn't been finished though, so please, everyone here, if you keep believing those numbers, make sure that your regulators or your different boards don't suddenly go, oh, I like ISSB, but I'd like a pick and mix approach. That's not how it works if you want global standards with baseline. So it's going well, but we've not finished yet, and we understand people might go at different pace, but please don't change it so that you couldn't compare and contrast.
Perfect. So we're getting already some questions from the audience in, but before we get to those, I'd like to have one more poll question to the audience, and that is about what should the predominant objective of sustainable or sustainable finance, technology here on my side. So what should be the predominant objective of sustainable finance policy instruments? Can we bring up the second poll, please? To require investors to assess their risk exposure to sustainability factors and articulate the actions they take to reduce such exposure, so risk exposure focused approach, or to require investors to articulate the actions that they take to contribute to an economy-wide transition aligned with sustainability goals, so more the impact side. And while we're waiting for those results to come in, Verity, maybe you can also comment on, with regard to those two objectives, how do you think that ISSB's global reporting baseline will help investors towards achieving sustainability goals? So rather the second side.
I think Sacha and Nicole have already mentioned this word opportunity. And, Stephane, you have really good reasons for focusing on risk. So I'm not going to try to convince you otherwise. I'm glad you're doing that. I think that's why the Basel Committee for Banking Supervision also adopted S2 for that same very strong, good reason. But investors want to know about the downside so they can protect the downside and limit the downside, and also about the upside. Where do I want to allocate my capital? What opportunities do I have to grow? And so companies really have an opportunity to talk about the risk and the opportunity, their strategy. And I think, this is material information. This is what investors need to know about the growth and the value creation that companies offer to capital markets in the process of transition. I think when it comes to risk and this question of what some people have called greenhushing or so on, that there are some companies that have been very thoughtful about coming up with real transition plans with strong indicators and metrics. And maybe it's because I'm based in the US that I know that they're afraid to disclose those plans, and they're afraid to talk about them because they'll be sticking out their neck as someone that is going to be more costly without the benefit of this comparable landscape, a level playing field of these transition plans. So certainly policy can help reduce this singularity that companies might face in sharing this information about their having a more sophisticated plan. But companies know that it's going to cost. They have specific plans about how to manage those costs, and investors need to know that information. So I think in this level playing field of alignment, of having clear S2 aligned disclosures with the benefit of more detailed guidance on transition plans can really be an opportunity for companies, including real economy companies in energy materials-based jurisdictions where they can really be able to show their sophisticated approach. Of course, some are starting at a lower place, but many are ready and prepared to have these conversations, and we know investors want to hear them.
Yeah, and maybe also, Stephane, to that topic and to that question, from your perspective, and given the OSFI's mandate, right, is how can a regulatory approach that is mainly focused on risk management, so rather on the first of these two, also contribute to investor action that positively contributes to sustainability goals?
Yeah, I'm really heartened by the results. Actually, I'm actually quite surprised at the number of participants who are in favor of the risk exposure lens. But I do want to just couch my comments quickly by saying that the risk for prudential regulators to focus too much on the opportunity side is the risk of being seen incentivizing certain behavior or certain investments, and that would really, really undermine the prudential capital frameworks, and because all of a sudden you would politicize the regulator, right? So we're highly sensitive to being seen as being political in this space, and so it's a bit easier for us just to focus on the risk, although our guidance does expect institutions to consider both the risk and opportunities, but we tend to focus more on the risk, and it's that whole issue about being seen to incentivize, and if we start using our prudential tools for purposes of incentivizing certain types of market behavior, then you open up the floodgates. Should we be incentivizing infrastructure construction? Should we be incentivizing pharmaceuticals and hospitals? And where else do we need to move capital? And then all of a sudden, the prudential regulator regime starts to fall apart, right? So, but we feel that the risk approach also inspires and instills investor confidence in sustainability issues, because I think investors want to feel that the investees are taking the risk seriously. They're articulating the risks with their boards and senior management. They're measuring the risks. They're disclosing the risks, disclosing how they're going to be mitigating and measuring. So I think from the risk angle, we can contribute importantly to the narrative and the discussion. And I think even like in the space of scenario analysis, there's a lot of dialogue around the value of these forward-looking scenarios. I think they're extremely important for investors to see not necessarily the number. I always get in a debate with people about the value of the results, but it's the discussion about what does your business look like in 20 years if these potential pathways unfold, right? So I think there's value in the risk approach that we have. So.
Yeah. Thank you. I think it's really interesting to see that we have kind of almost a tie-up, but a majority for the risk exposure focus. So I think that shows how much both areas are really important, and probably also, as you said, Stephane, one is also building upon the other, right? So they're obviously not completely detached from each other. Slightly different topic, but also going to the same direction. Nicole, given that the Australian taxonomy right now is still planned as voluntary, do you think a mandatory disclosure against that taxonomy could accelerate the contribution by companies and investors towards Australia's transition to sustainability goals? And if so, how should such disclosures best be put in place?
Yeah. I mean, I think the word mandatory means a lot of things to a lot of different people. I like to take it a step back and say, so what is this piece of information architecture that fits into the whole around everything that we're talking about in terms of the disclosures, understanding your risks really well, setting your targets, embedding it in your strategy, moving to credible transition plans, and then allocating capital in accordance with the opportunities. And I think taxonomies fit in well as part of that information architecture to help good decisions for investors and the allocation of capital. And of course, the more that information is aligned and that information is flowing up, so there is benefits in terms of if entities are reporting in some way and using the same information, that really flows up. And we spoke a lot, I think, at the previous session around how that data and information then becomes very helpful for investors, and they're much more informed to make additional decisions. But I think in the first instance, if we really look at a taxonomy, it is inherently a child of the green bond market, right? So it is very much in its core fit for purpose at the activity level. And so really, I think our initial focus is going to be using it within that context. For sovereigns to start to use it in that context, and there has been indications that there's a lot of interest for green bond frameworks to be allocating capital in the Australian market in accordance with the Australian taxonomy when it comes out, for sub-sovereigns to start to use that, for corporate issuers to start to look at that. So really focusing on that capital allocation at that activity level from a use of proceeds and get people really understanding and using this. Where I do see a lot of utility is with regards to its complementarity as a piece of information to track KPIs in corporate transition planning. And I think what we saw in the previous session with CPD, they were saying companies or entities that are doing corporate transition plans that have all the metrics, so what we're seeing as credible transition plans, are actually allocating significantly more in relation to opportunities. And so I think what would be a helpful piece of information is, even on a voluntary basis, looking at the capital allocation aligned with the transition plans, and to what extent that capital allocation, if it's covered by the sector of the taxonomy, that it's starting to be allocated in accordance with the taxonomy. So really I see it as almost like a KPI. And again, if you're thinking about the risk and then the opportunity side on the ISSB, it's also a very helpful KPI. So I guess it's not necessarily about whether it's regulated, everybody needs to be reporting on, like where is it actually providing useful information for the market and can be used as part of that broader architecture.
Yeah. Sacha, please.
I want to add a point. I can understand why Stephane would want to concentrate on the risk side, but I think we have to really remember, first of all, I understand the point you made, but the fossil fuel industry has had many subsidies over the years in every sort of region of the world. So, you know, it hasn't stopped encouraging other sectors. So we have to remember that. Secondly, if we only focus on the risk factor, that really does affect how the PRI or anyone does anything, because everyone thinks this is a box ticking exercise or a risk mitigation exercise, when actually it's not. And as someone who spent many years investing in things like car companies that hadn't thought about EVs are the ones that are going to fail. It wasn't just a ticking the box exercise. You know, new companies came out, certain companies like Tesla and others are coming out. So this is really part of your business model. And I think if we only stick to one side of the risk equation, not the opportunities, we miss out. And the other thing, of course, as asset owners here, you absolutely want to be investing in the companies that are going to win in the next 20 years, not lose. And you can't do that by just risk mitigation. It's absolutely linked to this. So I think it's coming, it's getting there. And we have to, as an industry, we have to message that better, because we are seen as a risk mitigation industry, not always a positive opportunity growth where the industries are going.
Good. I think that's been a nice kind of summary on the discussion here for this last poll question. I'd like to move to the questions from the audience, and we have one that has been particularly high voted, and that is, I noticed that there's no panelists like from the US, I guess, representing the US in terms of the regulatory perspective, and given the importance of the US as obviously with regard to global public markets and being the largest economy in the world, how are panelists staying apprised if US regulations and working with US counterparts to manage the US regulatory challenges? So basically, how do you make sure, I think
Start with
a
that one.
question for
Thanks,
you,
Teal.
Verity.
As the only U.S. citizen here, I think, up on stage. So at least for the ISSB, our strategy has always been a market-driven approach. You know, the ISSB standards are really developed with market input. We hear from investors. They're our primary sort of customer, if you like. The standards are designed to provision useful information for investors. And we also talk to companies to find out what information are they already preparing and to understand how we can achieve that cost balance, which is when we're making both investors slightly disappointed and companies slightly disappointed, we know we're at the right stage of that cost-benefit balance. So it's a trick, and anyway. So the market-driven approach in the U.S. is really about investor demand. And what we're hearing from global investors is that they want the ISSB standards. So it's investors in the U.S., so BlackRock, Vanguard, Capital Group, Neuberger Berman, California State Teachers Retirement System, California Public Employees Retirement System, and many others are now publicly in their voting guidelines, in their investment policies, in their sustainable and responsible investment policies, mentioning that they expect their portfolio companies to use ISSB standards to disclose information to them. They're also mentioning SASB standards. These were a lot of organizations that had previously said we want to see TCFD and SASB, and now that they know that the ISSB standards are incorporating TCFD and SASB, they are now updating their guidelines, including for the past voting season, the 2024 proxy voting season. They have been already starting to ask companies for ISSB disclosures. It's also investors outside of the US. So it's global investors like Japan's General Pension Investment Fund, which has publicly stated support for ISSB standards and encouraged regulators in every market to adopt ISSB standards, including Japan. It's also investors in South Africa who are talking to the Johannesburg Stock Exchange to say, you don't need to reinvent the wheel here. You can align with the ISSB global baseline. So, you know, when I go to Brazil and talk to investors there, they're saying we need the regulatory mandate to get the information that we require, and they achieved that there. So it's this investor demand which makes it true in the U.S., regardless of the SEC final rule and whether or not it comes, you know, to be a final rule, that the overarching SEC rules requiring companies to disclose material information to investors, when there's this clear demand from investors about what information is material to them, then it's an easy choice for companies to make. We also put out a voluntary application guide to help companies understand, especially when they've done TCFD and SASB already, and we're talking about 80% of the Russell 1000 companies and maybe 95% of the S&P 500 already disclosed to SASB. And so they're very well prepared to transition to ISSB in the light of this very clear demand from their investors.
Definitely lots going on from the ISSB side, not surprisingly.
Just a couple of points. Completely. It's already happening. Don't always have to wait, as much as I'm a regulator, don't have to wait for a regulator for things to happen. And of course, that's what's great about capitalism. Credit rating agencies are wanting assured numbers so that they can make decisions. ESG ratings, which are getting bigger and better and important, they are going to make sure. So there will be lots of things in there, as well as the trillions of dollars of asset owners saying, I want your metrics to be comparable with someone else. So that's already happening. And I think you're right, SASB standards, which came from the US, from Mike Bloomberg and other things that have come from there. So I think these things are happening anyway. But that's why some of our jobs are to help the other parts of the ecosystem in encouraging companies, because companies do want to do most of this, but they just want to do it once. And they also want to explain to their investors, because their investors are asking them all the time. And if they can have a metric that can be used and then they can look good versus their peers, because that's the other thing in capitalism, you want to look good, you don't want to look bad. And being the only company that doesn't have a Scope 3 emission target or saying anything on that in 4 years' time, I think won't be a bonus for you.
Thank you. Anyone else wants to comment on that? Otherwise, we have more questions coming, and I think one that is also covering a topic that we also discussed about in some of our calls that we previously had, and that is looking at is there a risk of over-regulating to the extent it limits growth and innovation in the sustainable finance landscape? Thinking about UK SDR, specifically where it seems more restrictive than others, or EU SFDR similarly as a moving target. So that's a question from the audience. I think this kind of refers to the ongoing debate, right? What's the right level of regulation? Are we seeing regulation rather winding back again, or is it going to continue? And you know, how do we ensure we have the right level? And since basically the SDRs,
Well,
you probably want to take that one.
I'll go first, but I mean, the first thing is we've done many consultations, and I think the last panel said it, the London Stock Exchange survey said 90% of the 300 asset owners survey said that regulation has been helpful to meet their sustainable 90%. So the industry has said, I want you to regulate ESG ratings. I want you to help me with anti-greenwashing. I need this help. So it's not one of these things that's just come from a random number generator, and all the work that you're doing is linked to that. So I don't think that's the case. We don't have any more things to do soon. We just want to make sure they're implemented. So once you start having a naming and marketing regime so that you can't claim something that you shouldn't be doing, now the job will just be normal, boring regulatory supervision, keeping the system going just like you're doing, and hopefully then the market will make its own decisions and balance it. So I think we've got that balance right. But of course, and Verity said it, is when most people are either a little bit unhappy or a little bit happy and you're sort of in the middle, then you're roughly stepping in the right direction.
Nicole, do you want to?
Yeah, and I would just say, echoing from the experience within Australia, both, of course, you know, which is why I started with that origin story around really that investor and momentum behind the finance sector to get on and get that information architecture in place so that they can start making efficient capital allocation decisions. But equally, when we've just legislated our ISSB standards and the broad support from across the corporate sector, within the real economy, from the finance sector, there were debates around the margins, around the how and the pace of implementation, but there was never a question that we shouldn't do it. And so really you had this large scale across the economy support to say, yes, let's get this done, let's get this legislated, this is going to be helpful and efficient for the market. So I think that, you know, and that's always that calibration, keep a decision useful. Of course, we need to ensure that as we implement this stuff, we refine it over time. We make sure that we're moving in the direction that it continues to be that information source to the market. But definitely, you know, echo what you're saying. The sentiment is that this is very useful.
Of course, Nicole, that's so powerful coming from an energy and materials-driven economy, of course, knowing that there's just one way forward, and it's a really important statement. I think to your point about where regulation can go too far, I think, you know, the risk there is that a regulator might ask for many things that are not decision useful and end up taking companies a lot of time, effort, and cost to develop stuff just for the stuff's sake. And so it's really important to maintain that focus, because when companies are spending the time on decision useful information for investors, that information is also useful for their own board to supervise that company, for their own leadership to make sure their strategy is really aligning to the future that they foresee, and the metrics are showing that they're executing on that strategy in a satisfactory fashion, and then potentially even, you know, linking to compensation outcomes related to that. So it's worth their while to take that assessment, that annual assessment, to seeing how is this relating to our real business that we're describing in our financial statements, and how is our future expectations really aligning, affecting our financials, also based on what we are seeing in the long-term horizon, because we have this, you know, we're picking up our heads and looking at the sustainability-related horizon that's going to affect our cash flows in the next 1, 3, 5, 10 years. So I think when you get back to that decision usefulness, that's where regulation might go too far if it's asking for just this compliance exercise. And I think companies are starting to recognize that.
Thank you. Stephane, did you want to?
Yeah, Till, I mean, as a financial institution regulator, regulatory burden is probably the number one thing that we hear about. And, you know, I have sympathies because the institutions are, you know, sustainability, or in this case, you know, my focus on climate is one topic of many, right? I mean, just think recently, I mean, our institutions are dealing with guidance on technology risks, cyber, increasingly AI, and now foreign interference, national security issues. I mean, institutions, you know, the CROs are dealing with a lot of a suite of risks, and they all have their priorities. And I think for sustainability, or in my case, climate, what was really important was to get expectations in front of them and give them the target, the baseline that they can aim and start working towards, and give them the time to meet it, right? And I think up until I think what we're seeing domestically and internationally is just a lot of moving targets and a lot of moving expectations. And the sooner we can get to a place where, to Sacha's point, just some sort of leveling, and then let them do the work to get there, because institutions are facing a lot of risks.
Yeah. Thank you. I've got another question that is a bit more specific, and that is, do you see any prospects in your markets for the adoption of a price on carbon? So obviously it's seen by economists as a necessary point to move us towards addressing climate change. So any view from your perspective on a price on carbon for the markets that you're representing, or anyone wants to pick that one?
I'm not sure about the other jurisdictions, but we have a price on carbon in Canada, and we've had that for a number of years, and it's the direction of travel on that is well established, and market participants know what it's going to be over the next number of years, barring any political changes. But I mean, we've had a price on carbon for some time.
Yeah, I mean, in Australia, you're starting to see it not across the whole economy, which I think would be very efficient, but certainly there's been a lot of movement within the real economy regulation within this last term of government around what we call our safeguard mechanism, which is very much a type of price on carbon for heavy industry, with a expectation of a year-on-year reduction in emissions, and a trading scheme within that industry. And so I guess the prospects of whether that could go across the whole economy, that remains to be seen. We know that carbon pricing has been a tricky issue and often gets quite politicized, but I think that was a significant step forward. And I think, again, across the board, people, when that mechanism was legislated, there was broad-scale support, even within industry, to just get on with the job and get that done, because that is a clear pricing signal that will really help particularly those industries that are covered under that mechanism to get on with the job, and do so in a way that is going to be competitive with their peers, because everybody has to do the same thing.
Thank you. There's another interesting question, and that's maybe one also for you, Nicole, that is looking at biodiversity risks and nature risks and other pertinent risks should be combined along with emissions to get to a holistic picture of climate impacts in the world. So how are the international regulators addressing that challenge? And I know that ASFI is also doing a lot of work in that direction. Maybe you can comment from your side, but happy to have other views also on the nature and biodiversity topic.
Yeah.
Please, Nicole.
I mean, so we know that there's obviously been a lot of momentum, and the TNFD, Task Force on Nature-Related Financial Disclosures, have really got the conversation going. I do think, though, we've got to this point where we're stuck in this decision usefulness situation at the moment, because risks with regards to the environment are often place-based, localized, and we're trying to use, I think, quite sort of global and mechanisms to conceptualize what is risk at a conceptual level, but it's very hard for companies to see what this means for them. So that materiality piece is, I think, something that we still really need to look into focus. And so I think there's a bit more work to do in that space for companies to really understand what this means and how to deal with it in a way that is relevant to them from a material aspect. But I think certainly it's on the radar, and it's something that we need to deal with, right? Climate and biodiversity at a global level, these things go together. Fixing biodiversity will very much help with the climate, and so it's not something that we can just say, oh, that's separate. But I do think we do need to just be cognizant of this, that we don't try and just do a literal plug and play in terms of the expectations and the type of information that we need that ends up being not decision useful. Again, I'm always keen on the opportunity side. So, we are looking even within the Australian taxonomy to extend criteria, so to identify opportunities, particularly within the agriculture and land sectors, where you can make investments that drive biodiversity outcomes. So we do see that as another avenue. While we're busy grappling about what this means from a risk perspective and a materiality perspective for businesses, we can also start to look at how we can identify opportunities to start investing in.
Yep.
Verity, and then...
Yeah, completely echo Nicole's point, and just to add a few more points in support of your remarks. We have biodiversity ecosystems and ecosystem services already showing up in our SASB standards, which complement S1 and S2. S1 and S2 both require companies to identify their risks and opportunities, provide information about those, and including industry-specific information, because we know this is really useful to investors in evaluating a company against its global industry peer. And so we have a project going on right now to look at nature as a topic. We also, because we have the climate standard in existence and we know that there's a lot of intersectionality between climate, nature, and social issues, we also put out some educational material that's available on our website that talks about how companies can think about the nature and social aspects of climate when they're preparing their climate-related financial disclosures, because some of those things are not hard lines. And some of those disclosures will be appropriate for climate-related financial disclosures. That said, we're also asking the market, starting with investors, what information is decision useful for you in your investment process, your investment analysis, your decision to allocate capital, upweight one company or against another. And so we're starting to hear some answers, and leading up to the biodiversity COP later this year, we expect to hear and see more reports from investors about how they're thinking about the financial implications of nature, which is really excellent information for us. If you in the audience have any reports or analysis to share with us, we'd be really grateful to hear your views about how you're thinking about nature. And also, we're updating some of our SASB industry-specific standards, including agriculture, to your point, and also metals and mining, where you can think about ecological impacts of mine tailings management in case of critical incident risk issues. So there's lots of places where we're thinking about this topic right now, and we'd love to hear from the market about what's needed for standardization.
Yeah, just briefly, I mean, and Stephane said it quite right. We have to at least guide companies what might be coming and give them time. They're starting to get asked this, and we obviously know biodiversity is going to be huge. It is going to be one of the big topics. It's not completely separate, though, to climate in any way, shape or form. So how do we work that? And I know TNFD has done an excellent job of trying to be integrated with the systems that are out there. And I think that's really important that we do that. So it's not, another thing and it's on the side of a desk or it's something there. It's all back to that financial materiality, sector specific. So the Transition Plan Task Force, which I won't repeat, had World Wildlife Fund in the room and had in each sector where it's important, you should be thinking about this. But we will give companies time to make sure that they have that information. But if that's what this kind of information that you want, you're the asset owners, you own these companies a lot of the times, you own their bonds, you should be asking for these kinds of information. And I'm sure some wonderful capitalist ratings company will have a nature rating at some point and highlight who's doing a good job and who's not.
Yeah, I think on the nature topic, we certainly also hear from our clients a lot of uptake when it comes to TNFDs or the voluntary disclosure frameworks, and definitely a lot of activity there in terms of looking out to combine this also with TCFD and not kind of doubling the efforts, but really seeing it as a holistic topic to disclose on. So certainly an important topic to continue to look at. So just looking at the questions that are coming in. But maybe we also have just 5 minutes left for this session. So if you have any views to wrap up the session from your perspective, and what you would like to the journey to go towards in terms of regulation, in terms of standardization, maybe I make it just a closing round. Verity, do you wanna start?
Sure. Thank you. You know, I'd start with just sort of the momentum here. So, before TCFD disbanded, following the issuance of S1 and S2, after the Financial Stability Board reviewed our work and said, "Job done for the task force. We can now let that task force on climate-related financial disclosures earn their laurels and move on to the next thing." Before the TCFD disbanded, there were 5,000 organizations around the world who pledged their support, their public support for TCFD, and lots of companies have already disclosed to TCFD. We're now seeing 4,000 companies disclose to SASB standards, and that's 4,000 companies from 83 different jurisdictions. So it is not a US-only thing. It is 83 different markets that are using and disclosing information to SASB standards. We also know that many investors are licensing SASB standards because it's built into their investment analysis and research tools, which is a major proof point for that industry-specific information being decision useful and moving capital. The momentum I described, where we're seeing 25 jurisdictions quickly on the way to 30 who are adopting IFRS sustainability disclosure standards, S1 and S2. That adds up to 55% or more of global gross domestic product and more than 40% of global market capitalization. That's a huge amount of the market, the global market, that is already aligning to the global baseline, the ISSB global baseline. And so at this point, jurisdictions have to consider, do they want to risk being apart from and missing out from that global comparability that investors are looking for? Do they want their market to not be at the global table? There's a real risk of damage to companies in markets that are not aligned with the global baseline.
Stephane?
I was going to tell you a little anecdote, but I think we don't have enough time. But over the last couple of years, we've had thousands of engagements and letters and feedback from all market participants, including Canadians and NGOs. And nothing struck a chord as much as a recent legislative change in Canada by our Competition Bureau, which introduced legislation around truth in advertising on environmental claims. It was a 2-liner, and it was passed on the last day before the Senate rose for the summer. And my phone hasn't stopped ringing since. And what I'm trying to say here comes back to what Sacha said at the beginning. Institutions are making commitments, they're making statements, they're disclosing information, and we need to hold, it's the market that can hold them accountable. And it's the investors and the shareholders and the clients and the depositors and the policyholders that are gonna drive this forward. It's not regulators. And you know, this is a really hot topic in Canada, but it just turns out that if there's penalties for incorrect disclosures or misleading disclosures, people really pay attention more than anything we could have done. I'm speaking very specific to OSFI's work, but so I think investors have a really, really important role to play in
Thanks,
expectations.
Stephane. Thank you. Nicole?
And I think really building on that point around that transparency and information, right? What are we doing here? What are we trying to achieve through creating this information architectures? We're providing that information to the market so they can make efficient capital allocation decisions. And so I'm really excited to get to that point of implementation. And I really want to start to see, as part of that, hopefully we can actually start to see capital shift towards those opportunities, because that's what's going to get us to our end goals. So I guess clarion call for investors is hopefully this information will be useful, start to use it. Yeah.
Thank you. And Sacha, do you have?
Always hard to go last. Use your power. you have so much power as asset owners especially, and asset managers. If there is a battle going on, as we know at the moment, with a bit of a backlash and everything else going on, which is why we need to try and make this material and explain why it is. But make sure your money for your investors that they've asked for, if it's material, it is being managed in the way that you want it. And if the managers are moving in a different direction, move the money to the managers that are doing a good job, because that would help change the system. And we've done that with ESG ratings, which is something we haven't really talked about here. But if you're using ESG ratings as part of your investment process, make sure some of it is forward-looking rather than just backward-looking. And please ask how much is E, how much is S, and how much is G, and how they manage their conflicts. We will be making sure around the world that we start regulating and making sure that that happens, but you can do that before the regulator does.
Thank you, Sacha. We're very happy to have that discussion with our clients for sure. So thank you very much again to the panel for all your insights that you have provided. Thank you very much to the audience for all the questions that you have provided and the interest. So please give it a hand for everyone.